Grow your practice, grow your wealth, grow your impact. Find out how to spend less time in the dental chair and more time on the things you love.
Welcome back to the Dental Wealth Podcast. Today I'm going to talk about a topic. Do not just turn off the podcast. It's going to be about taxes for a moment, right? The tax time's upon us. They deferred it out to July 15th, but it's upon us. So I want to talk about taxes for a moment. So like I said, don't turn off the podcast. It's important information. We don't want to talk about taxes. It's kind of one of those like ugly things that we have to do, or it's a necessary evil. But I want to talk about two of the biggest mistakes that I see people make. And one of them can be, they're actually both costly, but one of them is actually, I believe, probably more costly. And you have to understand that even in investment accounts and those types of things, the two biggest things, they say fees and fear are the biggest thing that hurt retirement accounts. And I would agree with that. But taxes are brutal. Like if you don't do tax preparation, if you're not actually working with a great tax CPA, if you don't understand what your benefits are and you don't make smart decisions, then it's going to cost you a tremendous amount of your wealth. When I say a tremendous amount, I mean a tremendous amount of your wealth. And so two things that I see that I want to talk about, because I came across an article on Forbes, and I like reading a lot of these different blogs and articles. And so I come across this article. Now, don't get too scared from this. I'm going to tell you what happens, but I want to talk to you about this article. It says that basically what's happened is the IRS has decided that they're going to go start auditing high income earners. And so they've created, they have a division at the IRS, and that division is solely responsible for going after and getting capital that these kind of high risk areas. So there's something called the Large Business and International Division, and it was recently funded. This division was recently funded so that on July 15th, they're going to start going after companies of high income earners. Now, there are some things in the article that talk about what a higher income earner is, but they're going to open up some audits, and they're going to go after people, especially people with S corporations. Don't freak out about your S corporations, which you should be, most of you. But it's to say that they're going to go after high income earners with S corporations. Now, before you panic or worry, I'm not trying to worry you here. It's not about that. But I'm going to tell you a different thought than you're going to hear in the marketplace, of course. And the thought is that you should welcome an audit. I want you to hear that again, that you should welcome an audit. And in fact, the more successful you get, the more likely you are to be audited. That's just the facts. That the more successful you are, the more people are going to look at you, because the more taxes you're not paying. And so the more taxes you're not paying, then the IRS sees you as somebody that they could possibly make a lot of money off of versus somebody who doesn't make hardly any income. And so you become a target. And so I've always been frustrated with tax CPAs in the dental world. And there are a few good ones, but there's a lot of really bad ones. And I don't say that. I know a lot of great tax CPAs, and they know that I say that, and I'm okay, and I'll stand by that. There's a lot of really bad accounting that happens in the dental world. I'm not going to go into all the reasons why I believe that is here, but I want you to hear that when you're told to run personal expenses, for instance, I'll give you an example. You're told to run, and I'm going to tell you a very costly example. So hang with me here. I'm about to give you a real life case study example of why you don't want to do this. Okay. So don't turn it off and say, I don't put anything through personally, but I want you to hear me. So one of the things I tell people I work with, I'm like, you want to look at your financials, and you want to be able to read your financials, and you want to make management decisions around those financials. You want to be able to look at your financials and know how your business is doing. And you also want to be open to an audit. So what ends up happening is your financials should be 100% correct. You don't run your car stuff through there unless it's legitimate. By the way, it's not legitimate unless you typically have multiple locations. But we don't want to run a bunch of garbage through our financials, okay? The dinners with your friends, and you get, bottles of wine and steaks, and you go, hey, say business. Okay, we're going to write it off. We don't do that. And I don't tell people to do that. In fact, I was talking to an IRS auditor one day, and they said that the biggest thing that they know right away to go for when they audit a dentist is the Costco receipt. And they see the 74-inch TV, and they walk in your dental office and they go, "Where's the 74-inch TV?" And it's not there because it's sitting in your living room. By the way, they know this stuff. You're not the first person who's tried to get away with going to Costco. But I always tell, don't put your personal stuff through your business. First of all, you want it clean. You want clarity as a CEO and a business owner. But second of all, you want to be open to an audit. If the IRS, you got a call, or your CPA got a call and said you're being audited, you want to go, okay, I'm just give them what they need. Hand it over. My financials are clean. I don't run anything through it. Maybe I'll get some money back. And you want to feel that way, because I had a client come to me recently, and he was posed with what looked like he was going to save around $130,000 if he put a strategy in place. So it was going to be about $130,000 of tax savings. Now, what he was trying to do was legal. It was absolutely legal. They just have a high chance of audit. And so he said, I'm going to put this strategy in place, and I'm going to save it's not totally 130, because he did have to pay, I think it was roughly $5,000 if he used the strategy, he would only have to pay $5,000. So tremendous 6-figure tax saving. See, what ends up happening is one of the biggest mistakes is that all your friends and all your dental buddies and everything else and people that don't really understand business are telling you to run a bunch of garbage through your business. Now, do you understand whatever few $1,000 you would have saved on running some meals through your business, it would have costed this doctor, it would have cost him 6 figures to run some wine and some TVs through his business. Because that's the reality. The reality is, if you run a bunch of garbage through your business, if you start being, a poor business owner and you start making those kinds of silly mistakes, whether your friends do them or not, if you start making those kinds of mistakes, you can't go after the good stuff. And so when you see an article like this that says, hey, look, the IRS, and by the way, this is as legitimate as it gets. Basically the Treasury Secretary went to the House Ways and Means Committee and said, look, I want some money. I'm going to put some money in the IRS to do nothing more than go after individuals that are high income earners that we think that they're not paying their share in taxes. Now, I don't think that's the large portion of the people listening to this, but I need you to hear me and say, if you saw something like that, how would it make you feel? Would it set panic? Or do you go, yeah, whatever. I ain't got nothing to hide. I don't run my garbage through there. And so I want to say wealthy people, and this is a dental wealth podcast. I want to remind you of that. Wealthy people do not put garbage through their business. That is a scarcity mindset, a broke mindset. It's a mindset of poverty. It is not what people do that are successful business owners and wealthy people. Wealthy people know that they might be audited, and they make sure their books are clean. They make sure, remember, going back to identity. I, as an identity, make sure that my financials and my corporation are clean. I am open to an audit at any time because I don't make unethical decisions, and I don't put things through my business that are not truly business expenses. And so we have this as a part of your identity, and part of your strategy is to make sure that you're actually taking that stuff out. And if you've been doing that, stop doing it. Now, some people hear me and they say, well, should I go back 3 years and take all that stuff out? Look, I'm not your tax CPA. I'm telling you, as of this moment of this podcast, I would tell you, do not run your personal stuff through your business. I'll make an even more affirmative statement. Wealthy people do not put their personal items through their business. And I'll even go a step farther to say ethical people do not run their personal expenses through their business. And that's a hell of a bold statement. Ethical, right? Going back to identity, are you ethical? One of the greatest things, I was listening to Jim Rohn years ago talk about, he said, I got my mindset changed around taxes. And my mindset used to be, I used to loathe taxes and hate this idea of taxes. But my mentor taught me that taxes are a great thing. They do so much for this country, and you get the opportunity to pay taxes. And the higher your taxes, the more successful you are. Now, you want to take every deduction you possibly can, and you want to take every legal action that you need to make to be within the law. But I'm also telling you that it is a pleasure to pay taxes. And I know that's a different mentality, but when you pay taxes, you go, look, I'm part of the solution and I provide. Now, tax money is wasted. That's another conversation. And I get that. I get that it's frustrating to watch tax revenue that you've worked hard for get wasted. And I'm not saying you should pay $1 or even a cent more in tax than you should. I'm going to reiterate that because some of you are like, I don't know, Eric. I'm not saying you should pay $1 or even a cent more in taxes than you're legally obligated to do. Okay? But I'm also saying that if you do have to make that check, I want you to pay it with pride. And I want you to go, look, this is my contribution from all my success. Look, I hope that everyone listening to this podcast someday has to pay the IRS 7 figures in 1 year. Like, wouldn't that be a great thing? Because as much as you loathe that idea, imagine what your income has to be for you to pay 7 figures. What a success. Imagine looking across the table as part of your identity and you go, this year I paid 7 figers to the IRS, right? People are like, whoa, this guy's super successful. That's gal super successful, right? I mean, look, you can look at it any way you want. You tell yourself a story. Look, I know, that when that check comes, it hurts all of us, but you are the person who is working hard and you are contributing a higher portion to the roads, to the military, to the service members, to everything else, to this country. And you are giving an awesome part. Like, part of your giving back is creating an awesome institution that is able to provide a large portion of what is used to provide a lot of assistance. And whether you agree with all those programs or not, there's a lot of people that are benefited from a lot of programs that are from your hard work and effort. And yes, I would agree that tax money is often wasted, and I hate that too. And we could argue about that and talk about that for 20 podcasts. But I want you to look at it in a different way. I want you to look at taxes from a different perspective and say, look, I'm a successful business owner. Part of being a successful business owner is I don't run garbage through my business. I don't run meals, and that's just unethical. It's undisciplined. It's not being a good steward of capital. I'm not going to do that. I don't do that. And be able to look at your team members and say the same thing, by the way. And so I don't do that. I have a great tax CPA who looks at every advantage possible for me to reduce my tax liability, because every dollar I keep in my pocket is one more dollar that I can spend to grow my corporation, to impact my team, and to impact my community. And so I want to keep as many of those dollars in my hand because I believe that I'm the better person to spend that money. So I'm going to do my best. So I'm going to find one hell of a tax CPA, not the cheapest tax CPA, by the way. I'm going to find that, by the way, I've seen people lose 6 figures and over a career working with someone 7 figures because they wanted to save $1,000 a year. You get what you pay for. I would have a great tax CPA. If you don't know one, reach out to us. I'll give you some advice on some. A great tax CPA. Pay for it. It's okay. You'll make a lot more. There's a reason they charge more. The tax laws are the same. The tax laws are the same for everybody, no matter what CPA you are, the tax laws are the exact same. They're all working within the same framework. But then why is somebody so more creative? Why is someone able to do so much more? And because they can provide more value, they're more talented, they research more, maybe they work harder. I don't know, but there's a big difference in tax CPAs. Make sure you have a great one, so that you can protect your income, your legacy, your estate. And if you do have to write the check that you write, I want you to write it with pride. And I want you to write it smiling. And I want you to go, hell yeah, I know that I've been a great fiduciary in my business. I know that I've stewarded cash. I know that I did what was that I looked at every single possible step to make sure that I reduce my tax liability. But with the check that I do have to pay, I'm going to smile because I know I'm part of the solution and not part of the problem. And that I'm helping to grow my country. And I'm telling you, as a service member who was sitting overseas with a bunch of broken equipment during a certain presidency when things were defunded to a great extent, I can tell you that people need that money. The military needs the money. The police force need the money. The infrastructure needs the money. There's a lot of things tax money goes to. That's great. And you might be the person who's putting those boots on that service member. So, with the check that you write, do it with pride. And lastly, put aside your tax money. I said there's two things. That was one. And I'm not going to spend 20 minutes on this next part, but I want you to understand the biggest mistake I see is people not understanding a P&L and a balance sheet and understanding what's actually net income and what goes to the tax liability. And so they don't put the money aside for taxes. They don't know how to do that. And because they do not know how to do that, they have not accumulated enough. One of the reasons why they work with a poor tax CPA who didn't advise them well because they saved $1,000 and then they get a phone call telling them that they got to come up with $90,000 at the end of the year. Is that you? I know a lot of people listening to this podcast right now are literally shaking their head as I'm talking, going, yep, that's me. I always get a phone call one day before taxes are due and saying I need to come up with $40,000. I know that because you're not working with the right people. And so make sure that every month you have an account, and you should have a checking account called tax. That checking account should have money in it. It should have accumulation in it. It should be put aside, and that money should be earmarked. I had a doctor, brilliant doctor, had put so much in her tax account, an equipment company had offered to borrow some money for a piece of equipment that had now this is going to be a little advanced, so if it goes over your head, just let it go. But she had accumulated a bunch of money in her tax account. She was looking at basically borrowing some money from a dental equipment company so that she could buy a piece of equipment. I'll say it slower. So she could buy this piece of equipment. Now, this piece of equipment that she was buying had a very quick ROI. So she was going to get capital back very quickly. So what she did was she borrowed from herself. She borrowed money from her tax account, charged the interest, had made a loan to her own company from herself, had high ROI on that piece of equipment. And then what she did was take the money, the ROI, and pay back her tax account. She borrowed the money from herself because she put it aside. One of the biggest mistakes, you want to talk about losing momentum in this world financially and business-wise and everything else, pay down a bunch of debt but not understand the tax ramifications of that, and then having to go back and write a giant check. Growing your revenue and paying down debt simultaneously, and then having the feet taken out of you because you didn't put enough in in taxes. Some of you know what that feels like. I will tell you right now, if you don't plan for taxes, you will wake up and it will be like, it will completely take the feet out of you and you will feel defeated. Momentum is a huge part of success in business. So if you're not focused on those things, you're not going to have the success. You're not going to, your feet will get taken out of you and it will cost you a lot. So as you're part of this identity in the last few weeks that I've been talking about, one of the things I want you to do is say, listen, I make sure that I have a great tax CPA because I am a great steward of money. I don't overpay in taxes because that would be foolish. I'm better off having the money set aside in my account because I'll do better things with it because, as I said in the last podcast, you are disciplined, you do save, and you do give. And therefore, the money's better off in your hands versus the federal government's hands. And then, as a business owner, as part of my identity, I do not run personal things through my business. I use a great tax CPA so I can take every advantage in the world. With the check that I do write, I write it with pride and joy as far as being a great person who contributes to society. I don't listen to all the naysayers and negative attitudes. Remember, most people have a scarcity mindset. Quit listening to them when it comes to your taxes. Listen to yourself and write that check with pride that's the person you are. And as part of your identity is I always put enough aside for my taxes. I do planning every month, not once a quarter, every month I put money, and some people I work with put money every day into their tax account. That's right, every day, so that when July 15th comes, there's not a worry in the world. Hey guys, thanks for listening. Hope you've enjoyed. We'll talk to you next time.